Hi everyone, this is Chris. Just wanted to do a quick preview of the week for you. It's the 25th of November, so this is for the coming week. We're going into the end of the month. So what I'm looking at is looking for dollar short positions. We sent a alert out on Friday for euro dollar. After we seen this ABC correction, we're in the area of between the 50 and 618 fibs. So we are in a good area to find a bounce. It wasn't a perfect A equals C. As you can see, the length of A projected from here was actually a little lower at 1320. Markets aren't always perfect. We could still come and test this, but you know the chances are just as high that we could turn straight from here. Of course, we've got big area of resistance up at 116, another one around 118. So those are our targets. So I think this week we could probably look to break out of this channel and start making our way towards new highs. Just gonna have a quick look at cable, which is pound dollar. Looks like we're in a big triangle. So I'm a side on the pound, just because we're going to chop around for a little while longer. There's not really a clear structure. Aussie dollar looks pretty good if we can get a pullback. I would want something probably down here at the 618, something like that. You know, then to look for long positions from there, hopefully into new highs. So that's on the radar. The Kiwi dollar, this pullback isn't as strong as I expected, so I think this is just going to keep going. This count might be different. This might need to change. I'm not really the risk reward isn't really there on this one, unless we can come back to, let's put a fib on. If that is a 5-wave rise, then you know we're looking for 66. I just don't see it happening. It's possible that this might be 3, and that we're in 4 at the moment, and 5 would be way up there. You know what I mean? So we might get something like this before we get a bigger correction. But you know, of course, we want as big a pullback as possible. What we're getting at the moment isn't really strong enough to the downside. So we'll see how that one develops for now. Dollar CAD, again, very choppy. Can't really make its mind up where it wants to go. It is in an uptrend. Looks like a rising wedge. I think once this breaks, this could just head straight back down towards 128. We did attempt to short earlier in the week. One of our traders, Craig, spotted a setup. Unfortunately, it didn't quite play out as we expected. We went and retested the resistance in this wedge again. So if you're looking for a trade in the dollar CAD, I would probably wait for a breakdown of this and maybe look for a retest. There's a lot of downside potential in this at the moment. Of course, you have to see how oil reacts because we're correlated with crude oil. So for dollar CAD to come lower, you want to see a bounce in crude. We still haven't broken out of this really really big channel since mid-October, and we've come down by, it's got to be about 30 something% now. Yeah, we've dropped by 35% since October 1st, which is crazy. But I would be waiting on a break of this channel before you can get bullish crude oil. Just gonna have a look at the longer term chart in crude. I believe we may need to change what we were looking at. So not sure if we covered this in the last webinar. I've got some drawings here. Might have been something I did midweek, but I think we had a bullish count. Let me draw it in. Something like 1, 2, 3 at the highs, and then we wanted a short correction for 4 and a way to retest these levels up here for 5. However, we have now spiked into this area which we had labelled as wave 1, which means that this isn't a 5-wave rise, it's a 3-wave rise. So it's either it's some kind of correction, which is not good. That's you know, it's bearish for crude. We could be in a big triangle, as I've got drawn from this low here, which a triangle moves in 3s, all ABCs. So it could be, that could be ABC there, big ABC here, third one there. Triangles have 5 waves, but they're labelled as letters, as opposed to 1, 2, 3, 4, 5. It's A, B, C, D, E. So if this is a triangle, you know, we could come down to maybe 35, but it'd have to be in 3 waves, because, as I say, all the subwaves are ABCs. They're all 3-wave moves, so it'd be something like this before we could go lower, or it might be the case that we break higher in crude. I predict we'd break higher. If we come down to 35 again, I don't see why we would go and retest these lows and, you know, go into the $20 per barrel region. There's no reason why. You know, we're getting seriously close to zero. It's just the likelihood of that happening. For me, it's, you know, we're closer to the floor than we are to the highs. So it just, you know, naturally you would want to be looking for a more bullish scenario in this case. So I think this could just be one big correction, which could then break higher, you know, in the next coming years. As for short term, as I say, you want to be waiting for that blue channel to break before you take any positions, okay? Which means maybe you want to be aside on dollar CAD. What else have we got? So the dollar Swiss looks like we made 5 waves up. We are now in an ABC correction. Let me just label this so it makes sense. So we had 5 up. We now want an ABC down. Okay, in 3 waves like this. And as you can see on this right hand side, I have labelled the subwaves. Okay, put that as in black. So the subwaves of A. So A has 5 subwaves. So this would be A. Then we get a bounce higher for B. We could look short positions from B. If I put the 618 on, that's where we prefer to go. If A comes in the region of 382 and bounces there, it usually means that you're going to get a 618 in wave C. From my experience, 38 on the first wave and then 618 on the second wave. So we'd be looking at 87, 66, and then you might look to get long down there. That's on the longer term. However, short term, if we get this 5th wave down, a nice correction to the upside, maybe towards 1, above would be better, but you know, we'll take what we can get. Targets are then in the 97s, so it's possible 250 pips to the downside still left in this after a decent correction. So that's another one that's on the radar. Dollar yen, another important one. We had this down channel. We actually traded, I think it was coming up for 2 weeks ago now, 113.50. We had a 100 pip profit. We got out just down here. We then had a strong bounce, which I'm going to label as a wave A of a correction. We've then got this slower recovery to downside, which I'll label as B. And as I said before, if you get to the 382 on wave A, generally you'll get to the 618 in wave C, so, and that comes in at 113.50. So 113.50 is probably somewhere I'd look for more short positions. Again, against this, you know, have stops around this 114 area. So as we've covered in the euro, we're expecting a bounce in the euro because we've had 3 down. So I'll just go back to just remind you what we're looking at in the euro. So we've had this 3-wave correction in the euro. We're expecting now, in the very near term, a bounce in the dollar yen. So if we combine euro dollar and dollar yen, we both, expect both those pairs to go higher. It means that the euro yen, so that's combining those two pairs, should be bullish. I'm seeing a potential triangle. It's possible we might come and retest these lows down here. But it looks like we're poised to head up to this 129 region. Okay, could break above, may not be a triangle, could be some sort of flat correction if we come down and retest. But for now, I'm keen on keeping it as a triangle. There isn't really a trade here, just because, if you were to go long here, you might want to place your stops, the other side of the triangle. But then, if it turns out to be a flat correction, it's going to stop you out and then bounce. So you think, okay, well maybe I'll place my stops below those lows, so you could put them maybe 65 pips away. But then what's the potential to the upside? About 100 and... You might not even get 100. We may stop here at 129.10. That'd be 105, wouldn't it? So the risk reward isn't quite 2 to 1. It's not really enough for me. If we come down and test this, there may be a trade down here. If we get down here, we can get, we can make stops a little bit tighter. Maybe take a 50 pip stop. Then we've got 150 pips to the upside. That's a 3 to 1. So the triangle setup, there's too much risk that the triangle could break down for me. In the scenario where we get a flat correction and retest these lows, it's much better trade setup, and there's much better risk reward ratio on that one. So I, of course, have my eyes peeled on that too. And I just want to take a look at bonds, because bonds drive the yen. So if bonds go up, yen pairs will come down. What I'm seeing at the moment, obviously a retest of this high. I think we'll then get a small correction down, which of course will pull those yen pairs higher. So there's that as well. Medium term though, I am bullish. I think that this pattern can continue, much higher after we get a decent correction. In fact, it can be a shallow correction for all I care, because I'm mainly watching the currency pairs. This is correlated, but I wouldn't 100% base my trades on purely bonds alone. I would rather see them just continue higher, break out of this channel, and retest this. Well, these highs up here. We've got an area of resistance there. Just draw that in. Okay, so that's the story in bonds. Bitcoin, some of you in the chat room will know, we've hit this 100% extension of Blue Wave A. We've overshot it a little bit. We've had an overthrow of the wedge. Okay, which means that we've spiked below. However, we've had daily closes below it. I'm not massively pleased about the price action, in terms of how clean this pattern is. If you were going to get long, you probably want to wait for a break of the wedge, back to the upside. So this could, start making its way higher from here, maybe at 5.5, and then you'd place your stops, below the wedge, probably at the lows, which are currently around 3.7. The alternative scenario in Bitcoin is that this blue line here created a triangle. Okay, so it could be that this, where I've got labelled 3, 4, A and B, this was all just some sort of triangle sideways consolidation. So it means that the move from 20,000 down to around 6,000 was wave A of the correction. Then we had a big triangle for wave B, and then wave C is going to take us fairly close to zero. Because, let me explain why. Usually we would do, let's say that this is wave A here from 20,000 down to 6. We then get the triangle, which is completed here. That's a move of 14,000, but you can't project that from 6,600 because it goes to a minus number. So I think the best way to probably project it on Bitcoin is using the percentages. So you can say that we had a 70% drop for that first one, then we've had this sideways chop. We've broke down from 6,600, another 70% lower. Hang on, just adjust this. 70% lower would take us to 2,000. So that's the alternate scenario. There's not really a trade on the bearish side. You just kind of got to wait for it to complete, and then maybe look for, maybe to pick some up on the long side somewhere. So that's it for this week. That's everything that I've got my eye on. Hopefully see some of you in the chat room this week. Thanks for tuning in, and I'll speak to you all later. Cheers. Bye bye.